Hi folks, and thanks for tuning in to another Watson Brothers video. Ian and I are here today to discuss the stats for October of 2021. Ian, in a few words, I know that's difficult for you. How'd things go?
I will keep it very brief, but let's start with single-family homes as we always do. Sales were off 29%. And you go, wow, off 29%, but inventory was off 30%. And if you think there's any sort of correlation there, there probably is. Why we are not worried is because the average single-family home price is pushing up again to $1,031,000, and the average sale price is up 24%. So if sales were down and inventory was up and prices were down, we'd be worried, but they're not. So things are pretty stable. Apartments, inventory's down 58%, prices are up 21%, and then in townhomes, inventory is down 48%.
Wow.
But average sale price is up 20%. So you can see the effects that simple supply and demand, remember back from grade 9 economics, is having on the market.
We also wanted to talk about interest rates. The Bank of Canada held the overnight rate for the end of October at that steady quarter of a point. Super record lows. However, they did say in many speeches that they were going to do that through 2021, and we are pretty much on the goal line of 2022. So our buyers are asking not so much now where the market's going, where do we predict interest rates are going, because anybody can predict that they're not going to stay at rock bottom levels. I think if we look at the banks, they're giving a good indicator. The 5-year rate right now is about double that of the variable. And what that means is that the variable rate, the bank's risk is very low. Interest rates go up, your rate goes up. However, if they lock you in for a 5-year term at, let's say, 3%, and over that 5 years, the interest rates go to 3.5%, the bank is losing money. So the Bank of Canada, they basically look at adjusting inflation to try and keep it around 2%. Right now, there's lots of stories saying it's running around 5%. Do the simple math, as Ian likes to say, on that. And when the Bank of Canada puts the interest rates up, it's like putting the brake pedals on the economy. They lower the interest rates, it puts the gas pedal on. And if you're at 5%, doesn't take, again, much more than grade 9 economics to figure out they got to slow the economy. And across the country right now, all the real estate boards are reporting that the fever of June 2020, when the market really took off, things are starting to stabilize. Neither one of us used the word correction. We're just starting to see things become more balanced. So, let's watch for rising interest rates, and we encourage you to sit down and just take a half an hour, do some mortgage projections on what your bill will be. But we had Michelle Beat on the show a couple of months back, and she's forgotten more about mortgage policy than we'll ever know. So when it comes time to get the real answers, let us refer you to a professional. Ian, you've got some other stuff to cover, more local.
I do, and who knew my brother was an economist? But
not me.
One of the things that I didn't mention in the stats was building lots. And right now, in the Valley, there are 98 building lots available for sale. And that is everything from acreages to single-family building lots. And that ties into where the City of Kelowna is going with our OCP. So the OCP is our official community plan, and it gets updated every 20 years. And they have just approved, and it is in front of the province right now for signature, our new plan for the next 20 years. And they're projecting that by 2030, which is only 9 years from now, that our population is going to grow by 45,000 people, or to about 161,000 people. And that sounds like a lot, and you know what? It is, because in order to house those people, they're projecting that we need 8,565 single-family homes and over 11,000 townhomes. Along with that, there'll be 2,000 resort-type properties. So in the next number of years, we need to come up with about 20,000 new homes for people to live in. And that is based on the fact that the average home size is shrinking down to about 2.1 people per household, but still we need more land and more homes to accommodate all these people. The city is projecting that right now we have a mix of about 39% of all the homes in Kelowna are multifamily and 61% are single family. By 2030, they're projecting we need to flip that it needs to be 57% multifamily and 43% single family. So we are going to see a large shift, and everybody says, well, where's everybody going? They're going to be going into multifamily.
They're
Because
going
the families are getting smaller, land is getting more scarce, and as you can see by the stats of 98 building lots available right now, the land is just simply not there. So that will ultimately, again, we go back to grade 9, supply and demand. We are going to have a shortage of housing continually going forward as we have migration come to our city.
That's going to hold pricing. The Okanagan has always had a very robust market as far as price goes. Ian, I got to give you my big white stat. Fell off my bouncy ball this morning. 24 units for sale.
Last month, I remember the number, it was 44.
24.
Wow.
Crazy. Folks, thanks as always for watching. Tune in next month where we will discuss everything real estate. And as always, 250-712-2222. Hopefully I will answer the phone for you.